Welcome back to the Malaysia Money Matters show. It's the 16th, April 25. Today, we're diving straight into what's moving the Malaysian financial landscape right now. We've gathered the key developments from our local companies, a snapshot of the international scene, and some important political news, too. Our goal today is, well, to cut through the noise and really understand what this all means for you. Let's start by unpacking the Malaysian company news.
Sounds good. Yeah, there's a fair bit of activity across different sectors
Yeah.
and some interesting potential shifts for investors to watch.
Okay, let's kick off with Aurelius Technology. They're proposing a pretty significant bonus issue, 2 new shares for every one you hold, and free warrants, too.
That's right. 2-for-1 bonus shares plus 1 free warrant for every existing share.
So if you're holding their stock, what's the immediate picture looking like? What does that actually mean?
Essentially, with a bonus share issue, the pie gets sliced into more pieces. The overall value of your holding should, well, in theory, stay the same initially. You'll just have more shares, but the price per share will likely adjust downwards. For Aurelius, they estimate the theoretical ex-bonus price would be around RM1.05.
Okay, so more shares, lower price per share, and the warrants. What's the deal there?
Think of the warrants as a potential future opportunity. They give you the right, but not the obligation, to buy more shares at a set price later on. Here, it's assumed to be RM1.07.
Like a rain check to buy more shares.
Exactly. It's like having a rain check at a specific price.
So if the share price goes above that RM 1.07, those warrants could become quite valuable, right?
Precisely. If the company performs well and the share price moves past that exercise price before the warrants expire, you could potentially buy additional shares cheaper than the market price then. And Aurelius is aiming to raise a pretty substantial sum, around RM463 million, if all these warrants get exercised.
And then they plan to use that
for working capital and future investments, basically growing the business.
which makes sense. Given their recent performance, their net profit actually doubled and revenue jumped, what was it, 128%. Massive growth.
Here's where it gets interesting, though. Despite this really positive news, doubling profit, their share price saw a slight dip today. What gives?
Yeah, that can happen. Sometimes, the market anticipates good news and it's already priced in. So the official announcement doesn't cause another surge. Or it could be investors waiting to see how the plans actually play out, or just broader market factors pulling things down that day.
Right. A reminder, the market isn't always perfectly logical.
Definitely not. It's not always a straight line from news to price movement.
Okay, moving on to Binasat Communications. They've had a civil works contract terminated, RM13.2 million, linked to Amazon's data center development in KL.
Yes, that's the one. The company that awarded it, Enertra, decided to handle that specific part of the project internally instead.
So what's the damage for Binasat? Well, Binasat is saying they don't expect this termination to significantly hit their bottom line.
Really, even at RM13 million.
It might be a smaller piece of their overall work, or perhaps they have other projects lined up. They seem quite confident it won't be a major financial blow.
And they've been making moves to diversify anyway, haven't they? Buying hotel suites, selling stakes.
Exactly. They're clearly broadening their horizons beyond just telco infrastructure. It could be a strategy for resilience.
Makes sense. Though their share price hasn't changed today, but it's down quite a bit year to date, you said.
Yeah, that's right. It suggests investors might still be, watching closely to see how this diversification strategy pans out long term.
Now, some brighter news perhaps for Binastra Core. 2 major contracts landed, totaling a hefty RM 458.5 million.
Yes, very significant wins for them. Building service departments down in Johor Bahru, it's actually their first project in that region.
Wow, breaking new ground. What are the projects?
One is a 43-story block, over 800 units. The other's a 41-story one, over 700 units. Big developments.
So that pushes their new contracts this year over RM700 million.
Correct. That builds up a really substantial order book for them.
Providing earnings visibility for the next 4 years, the report said. That must be reassuring for investors.
Absolutely. A strong order book means predictable future revenue, which is always good. Plus, they recently reported record high earnings, net profit more than doubled.
And the market likes it.
It seems so. Their share price saw a significant jump today. Positive news translating into positive market reaction for a change.
Okay, next up. Keyfield International, oil and gas services. They're buying a new cable-laying barge, US $20.5 million.
Yeah, and what's particularly interesting here is they've already secured a charter deal for this new barge with a Chinese company.
Oh, nice. So it starts earning its keep quickly?
Potentially, yes. The deal could be worth up to US $9.1 million. But more strategically, This barge is designed for underwater power cables.
For offshore wind farms.
Exactly. It can also do telco cables. But the focus on power cables for offshore wind aligns with the big push towards renewables. It's a clear diversification move away from pure oil and gas.
So a smart, forward-looking investment then, tapping into that green energy trend.
That seems to be the strategy, positioning themselves for growth in that sector. Despite this, their share price dipped slightly today. Again, short-term market noise, perhaps.
Right. Now, Linoco Corp. Sounds like some concerns there. Auditors flagged issues about their ability to continue as a going concern.
Yes, after their FY 2024 audit. When auditors raise going concern doubts, it means they have significant worries about the company meeting its financial obligations in the near future, usually the next year.
What's causing the worry?
A net loss, and their current liabilities exceeding their current assets. Basically, more short-term debts than easily accessible funds.
That sounds serious. Though the auditors gave an unmodified opinion.
They did, which means the financial statements themselves are presented fairly, but they still had to include that warning paragraph about the going concern uncertainty. It's a significant red flag.
Is the board doing anything?
They say they are. They mention new hotel packages, plans to sell some land, seeking more financing. But, the context is that Linho has reported losses for the last 11 years.
11 years. Wow, okay. That puts it in perspective. Share price was unchanged today.
Yeah, perhaps the market wasn't surprised by these ongoing difficulties.
Okay, let's talk about a potential newcomer. Signature Alliance Group. They make kitchens and wardrobes, part of Signature International. They're heading for an IPO on the ACE market.
Correct. They've appointed underwriters, which is a key step toward listing. The IPO involves issuing 260 million new shares.
Who gets those shares?
There'll be portions for the public, for eligible individuals connected to the company, and also for existing shareholders of the parent company, Signature International.
And the funds raised, what are they for?
Pretty standard stuff for an IPO. Expansion, buying equipment, new branches, paying down some debt, and general working capital. Growing the business, basically.
And Signature International stake goes down after this?
Yes, that's typical. The parent's ownership gets diluted as the subsidiary brings in new shareholders through the IPO. It could be an interesting new option for investors in that interior fitting sector.
Moving to beverages now. LifeWater getting a buy call from NEF Research. What's the story?
MEDF is optimistic. They think LifeWater is benefiting from two main things. First, easing packaging costs because oil prices are low, or plastic packaging costs often track oil. And second, they're shifting towards more premium, higher-margin products. Plus, MEDF sees their valuation as attractive compared to a key competitor.
Makes sense. Lower costs, higher prices equals better margins. Are they doing anything else?
Yeah, they're launching a new lemon lime drink and looking into the mineral water market too, so expanding their product lines. A buy call like this can definitely boost investor interest.
Quick one on palm oil. Malaysia kept the May export duty at 10% but lowered the reference price.
Right. Duty stays the same, but the lower reference price suggests the government sees average market prices as having softened a bit, even though they're still above the threshold for the maximum tax. Minor adjustment, really.
Okay. Skygate Solutions, formerly UN, is buying a majority stake in an engineering firm, Leader Range Technology.
Yes, a 51% stake for about RM10.7 million. Leader Range specializes in advanced test solutions and industrial automation.
So this helps Skygate expand in the E&E sector.
That's the idea. It brings in new technical capabilities and market access. And the founder of Leader Range is keeping a large minority stake, which often helps with continuity.
Right, keeps the expertise in-house. Good point.
Mm-hmm.
And finally, for our local roundup, Tenaga National. Big news from Kuwait.
Huge news, actually. Their subsidiary, T&B Repair and Maintenance, secured a massive RM700M million contract in Kuwait.
Wow, what for?
Maintenance work at a major power generation and water distillation plant. It's a 7-year contract done as a joint venture with a Kuwaiti firm.
That really highlights TNB's international reach, doesn't it?
Absolutely. They already manage several projects in Kuwait, so this builds on their established presence there. It's a strong validation of their technical capabilities on the global stage.
Okay, that's a good overview of the local scene. Let's shift our focus now to the international stage. Things feel pretty dynamic out there, especially with the U.S.-China trade situation.
Absolutely. That's casting a long shadow over everything right now.
Let's start with China's growth forecasts. UBS downgraded their 2025 forecast significantly to just 3.4%. That sounds quite pessimistic.
It is. It's the most pessimistic forecast among the major banks right now. The main driver for that downgrade, according to UBS, is the expected impact of U.S. tariffs on China's exports.
I think it'll really bite.
Yeah, they estimate the current U.S. tariffs could shave more than 2 percentage points off China's GDP growth. That's a huge drag.
And other banks are trimming their forecasts too, so it's not just UBS being gloomy.
No, Goldman Sachs, Citigroup, others have also cut their outlooks recently. There's definitely growing concern about whether China can hit its official target of around 5% growth this year, let alone next. UBS sees exports to the U.S. potentially falling quite sharply.
So what's the expected response from China? Stimulus? Rate cuts?
That's the expectation. Fiscal stimulus, more government spending, and potentially the central bank cutting interest rates to try and cushion the blow and support domestic activity. Whether it's enough is the big question.
Right. Now, interestingly, amidst all this tension, Chinese President Xi Jinping is visiting Malaysia right now. His first visit in 12 years feels significant.
It definitely is significant timing. President Xi spoke about hoping for another 50 golden years in bilateral relations. The focus seems to be on deepening friendship, trust, and cooperation.
Covering bilateral and regional issues.
Exactly. Both countries position themselves as key developing nations in the global south, and strengthening ties is seen as mutually beneficial, especially, as you said, given the current global uncertainties in U.S.-China friction.
And speaking of that friction, China's Premier Li Qiang has actually urged Chinese exporters to diversify their markets, hasn't he? A direct response to the U.S. tariffs.
It seems so. He talked about coping with profound external changes. The message is clear. Find new markets, try new trade methods, and also try to boost domestic consumption to offset potential losses in exports to the U.S.
Makes sense. Meanwhile, we saw a bit of a bounce in emerging Asian markets recently. Stocks up.
Yeah, there was a bit of improved risk sentiment. It seemed linked to hints from the U.S. about potential tariff exemptions for the auto sector. Just a hint was enough to give markets a small lift.
And regional currencies strengthened against the dollar too, including the ringgit.
Yes, the ringgit hit a 7-week high. A welcome move. But like you said, the overall context is still cautious because of the broader U.S.-China trade tensions. These things can swing back quickly.
Yeah, and the trade war itself is just, well, escalating, isn't it? The tariff numbers are huge. U.S. at 145% on most Chinese goods this year. China retaliating with 125% on U.S. goods.
Those are incredibly high tariff levels. It's bound to significantly disrupt trade flows. And China's large trade surplus with the U.S. remains a major sticking point for Washington.
Any sign of talks? Or is it still a standoff?
Some U.S. officials hint at dialogue, but China's stance seems to be that they won't be bullied into talks. So, yeah, feels like a standoff. And we're seeing the effects already, like more Chinese goods being rerouted through Southeast Asia.
Beyond the general tariffs, the U.S. is also looking specifically at semiconductors and pharmaceuticals, national security probes.
Yes, under Section 232. These probes could lead to additional tariffs on those specific sectors, separate from the big reciprocal ones. There's a process, public comments, deadlines, but it's causing concern, especially in the pharma industry, about potential shortages and costs.
And this trade tension is worrying regional bodies, too. AMRO, the Asian +3 Macroeconomic Research Office, warned that growth in this region could dip below 4% this year, weakest since the pandemic.
That's their warning. They ran scenarios based on the tariffs, and the impact could be significant, hitting trade-dependent economies the hardest. The uncertainty alone is hurting investment and messing with supply chains.
And Macquarie specifically pointed to Malaysia as being vulnerable, didn't they? Particularly on semiconductors hitting our exports to the U.S.
They did. That's a key vulnerability for us. And they suggested this economic pressure could even force the government to delay plans for things like subsidy rationalization. So real domestic policy implications potentially.
Wow. It really connects globally, doesn't it? And finally, on the international front, even global oil demand forecasts are being cut by the IEA, citing these trade tensions.
Yes. The International Energy Agency lowered its demand growth forecast significantly. They see slower global economic activity because of the trade war. They also noted U.S. oil production growth might slow down because tariffs could make equipment more expensive.
And oil prices have already reacted.
Yeah, prices have dropped quite a bit this month. The IEA is also looking further ahead, predicting slower demand growth in 2026, too, due to a fragile economy and, the rise of EVs.
Okay, one last international point before we wrap up. Malaysia and South Korea working on an MOU for infrastructure cooperation.
That's right. They're aiming to finalize it by year-end. It focuses on collaboration in roads, infrastructure modernization, construction tech. South Korean firms have been quite active here already.
So this could mean more investment, tech transfer?
Potentially, yes. Formalizing cooperation often leads to deeper ties, joint ventures, and potentially boosts for our infrastructure development.
Okay, so quite a mixed picture internationally. Huge headwinds from the trade war, but also some positive bilateral moves.
Definitely a complex landscape to navigate.
Which brings us to what we think is, well, perhaps the most exciting news of the day. And that's the potential upside from President Xi Jinping's visit here. The possibility of, real progress on big infrastructure projects, maybe even the high-speed rail, plus potential collaborations in tech, like semiconductors, data centers. That could be massive for the Malaysian economy.
Absolutely. Deeper economic engagement with China, especially in those high-growth areas, could provide a really significant boost in the coming years. It's definitely one to watch closely.
Keep an eye on announcements over the next few days, folks. This visit really could unlock some serious future growth potential.
Agreed. Lots of potential there.
Okay, that wraps up our quick and comprehensive look at the financial news shaping Malaysia and the wider world today, 16th April 25. We really hope this deep dive has given you some valuable insights.
Yeah, hope it was useful.
And please don't forget to subscribe to the Malaysia Money Matters podcast for more in-depth analysis and updates. We'll be back soon with more of what you need to know to stay informed.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.